Hi, I'm Mark from Gostocks. Hi, Roop.
Hey Mark.
Congratulations, actually. You've come out with this ETF product.
It's
been actually a dream for you, I think. You've been talking about ETF for quite some time.
Yes.
Tell me about what is this ETF is all about, actually, as a product.
See, basically, ETF is a fairly new entrant as far as our Indian markets are concerned. For a very long time, we've had only Nifty Bs, a bank Bs,
Correct.
And a gold Bs. It's only in the last 1 year we've had the mid cap
as an index
ETF,
yes,
and a small cap ETF coming in.
Right.
So in that sense, we are in a nascent phase as far as ETFs are concerned.
Right.
But whereas in the US markets, I'm sure that there are more than 1,000 ETFs that are listed on the index.
So it's so deep.
Yes.
Absolutely.
There are so many flavors that they've come up with.
Right.
So if we look at what is an ETF? So now ETF in its simplest sense is nothing but a fund that's listed on a stock exchange.
Right.
It gives you the flexibility to trade as if you were trading a stock.
Right.
Okay. That's one. Two. Is an ETF a competition to a mutual fund? No. In my view, it's a clear no, because a mutual fund is managed by a fund manager,
Right.
who actively makes decisions on the portfolio.
Right.
Whereas an ETF tracks an index.
Index. Right.
For example, if we say a Nifty ETF, then the ETF is passively run, mimicking the ratio in which the index is constructed.
Right. If it is Nifty 50, equal weight for all the 50 stocks.
No. See, if you look at Nifty, Reliance, HDFC Bank will have the highest weightage.
Oh, within that. Oh, it's not equal weight. The weight. Right. Correct.
Okay. Probably the top 10 stocks might have close to 70% of the weightage.
Right.
Whereas the next 40 stocks might have the rest of the 30% distributed among them.
Right.
So in effect, the top 10 stock decide the movement of the index.
So you are exactly buying an index.
Exactly.
Right. Okay.
So that's the advantage. Now, what is an ETF? It's a portfolio of winners.
Right.
These are a set of stocks that have weathered every storm.
Right.
And they've come up clean.
Right.
Okay. Any stock which does not fit that criteria is moved out. And a new stock gets replaced.
Right.
So an index can never die.
Right. Absolutely. So, which means to stay in Nifty 50 stock index, there are certain parameters, and it has to adhere to those parameters
Exactly.
constantly to stay alive in that index.
Exactly. The portfolio gets rebalanced every, I think, 6 months.
Okay, it's a survey.
Exactly.
Right.
If a particular stock does not meet the criteria that's fixed by that index,
Right.
then it gets moved out and gets replaced by another stock.
So, right, additions and eliminations are a constant thing in that.
Yes, every 6 months that
and
happens.
The best survives. That stays.
The best stay in.
Right. Absolutely.
Okay, so that's the clear distinction between an actively managed fund and an ETF.
Fantastic. And now, why do we call it as a different flavor now? You have index already available,
right?
And people go and buy through mutual fund,
right?
So many schemes,
right?
Now, then, to whom this actually?
See, in my view, let me speak about myself.
No.
On one side, I would do my SIPs in a fund for the long term, in a mutual fund for the long term.
Correct.
I would allow the fund manager to make those decisions to ensure that the portfolio stays on top.
Right.
Now, in a particular time frame, the clear distinction is that mutual funds are set for the long term.
Correct.
Now, ETFs gives me the flexibility of taking a medium term call.
Right. Okay. if the duration is somewhere in a range of 1 to 2 years, kind of.
Exactly.
Okay.
Or 6 months.
Right.
See, for example, gold.
Ah.
Okay, gold's been very quiet for a good 3 years before it started a rally last year.
Right.
Okay, now if I believe that gold after its quietness for such a long time can show a trend for the next 1.5 years,
Right.
then I would move into a gold ETF.
Right.
Okay, now imagine I have an actively managed fund and I have an ETF. Now I cannot take a timing call on a mutual fund. I need to just leave the money there, allowing the fund manager to make the right decisions.
Right.
That's it.
Right. Okay.
Okay, but with the fund, I have the flexibility to time.
With ETF, you have that flexibility.
Exactly, and also my exits, because there's no rules on when I should enter and exit. And number two, the most important is the charges are way lower than a mutual fund.
So cost efficient on the one side.
Which tracks an index.
And the volatility part?
It just tracks the index.
So to that extent, the volatility is also taken care.
Yes.
Right. So it helps the probably a small investor who do not want to be too aggressive on his portfolio.
Right.
So because on the one side the volatility is mitigated to an extent, and then cost efficient, and he is there in the index.
Correct. See, if I decide to follow the index, then the best decision for me is to move the ETF way.
And within ETF, you are bringing a portfolio, kind of market portfolio kind of.
Yeah. So what we can do is now I take a call saying that I will not stay only with the large stocks, the Nifty 50.
Right.
I would want to have a broad play across the mid and the small caps.
Right.
So what I would do is, as a thumb rule, I'd put probably 50% in the Nifty 50 fund ETF. I'd put about 30% in a mid cap ETF.
Right.
And another 30% in a small cap ETF. So I get diversification.
Right.
Number two, I don't have to worry about rebalancing.
Right.
Because the index decides that every 6 months.
Right.
Okay. Number three, I get the same returns as the index keeps moving
less
in a
that
direction
small
that
expense, whatever
exactly.
it goes. So you will track the index returns, and then beyond this Nifty 50 or mid cap 50, small cap 50, you are also bringing gold on the one side as a part of the portfolio, and then you are also bringing in this particular software. We saw that you are bringing FANG.
Exactly.
FANG ETF.
See, the beauty now is with ETFs, I get the flexibility to also take exposure to US stocks. In India now we have Nasdaq 100.
Right.
So through an ETF, I can take a call on the tech stocks listed in the US.
Right.
Now FANG is even better. It's an aggressive call.
Yes.
Because in effect there are only 5 stocks.
Right.
That make the FANG index.
Concentrated one.
Yes. So now the flexibility of a ETF comes here. I can time my entry into a FANG index.
Right.
If I have to take an aggressive call, yes, that's available here.
Right.
Now this is not available when I look at a mutual fund. Because there's an active fund manager, and my job is to ensure that I leave my money there, allowing the fund manager to make all those educated decisions.
Absolutely. So which means no, in the asset allocation, so ETF should be one part.
Yes, definitely.
And going forward, you feel that ETF as a will spread around.
Yes, I have no doubts on that, because now imagine in a market like what we've seen since October 2021. From October 2021 till date, we've not seen the markets going anywhere.
Correct. Absolutely.
So if I had an ETF allocation, probably I have the flexibility to actually move between 1,000-point rally that Nifty has given me twice or thrice in this year.
Exactly. Within that period of 18 months,
right?
At least 3-4 times markets.
Yeah, so there is a possibility for me to take part in that possibility that otherwise will not be available to me.
Right.
Now this is something that we can evaluate.
Right. Fantastic. I think this is a new thing that has come for us to go to the market also. So ETF for small investors on the one side, housewives probably who
Yes.
are apprehensive about
Yes,
coming
yes,
into
yes.
markets, and youngsters who are coming in. All this is a fantastic opportunity to test yourself before jumping into aggressive calls.
Yeah, see, by taking a call into a stock,
Right.
you're introducing yourself to a lot of volatility.
Absolutely.
But the moment you take an ETF,
Right.
given the diversification, you have the time to make decisions. You have the time to learn.
Right.
You get the best of both worlds.
Yes.
A fund that behaves that gives you the flexibility of getting in and out like you would with the stock.
Right. Fine. Thanks a lot, Ru.
Thanks, Mark.